US cents, 81 euro cents and 64 pence sterling. Well, for more on finance, this morning we're joined by Rod North of Bourse Communications. Good morning. Thanks for being here. Now, take us through this set of data and what impact that's likely to have on the RBA when it meets today.
Well, I think this sort of key information that's come out this week, obviously retail sales yesterday with a decline, which was perhaps at the most pessimistic of the outcomes, being a 0.8%, close to 1% decline, and that was against June where retail sales increased by 1.2%. You'd think over that period for July, when all the sales are on, you'd think retail sales perhaps would have gone up in that period, and of course one of the big things was there was a big decline in spending at department stores of 10%, and we've got that combination of what's happening on the internet as well. But the data also in relation to jobs, the ANZ jobs figures came out yesterday as well, which showed a decline of 2.3% there. So what it's really showing, I think, is that a lot of the messages are quite mixed. So we also got inflation data, which actually was a bit more positive, putting the inflation rate annually at 2.2%. That's up a bit. And what we've got this week is official data released in terms of the GDP for the June quarter in Australia coming out on Wednesday, and then we've got the employment data coming out on Thursday. So I think in many respects the Reserve Bank will be waiting to see what happens to that official data before it makes a decision, I think, which will be a future decision about what it does on rates. So it's sort of unlikely that we will see the cash rate, which is currently at 3.5%, move today ahead of official data, but it does sort of show that there are mixed messages there, and that's just the local domestic information, and we sort of came off sort of weak sort of China data over the weekend, and we've got obviously the US and Europe to keep an eye on as well. So I think there's still a watching brief very much by the RBA, but I think the market was a bit spooked yesterday by data that from the local domestic front that wasn't as good as it could have been expected.
So what's your theory then behind the consumer spending drop, or is it a combination of all those things you mentioned?
Well, I think we've had sort of stimulus previously, which perhaps boosted the June figures. The carbon tax funding that sort of helped there, that enabled people to go and spend then. But I think generally it was quite interesting because there was a survey conducted recently about Australians and the rest of the world looking at Australia thinking, well, hang on a minute, things aren't too bad here. You've got low unemployment relative to the rest of the world. You've got a pretty good economy. You've got booming resources. It's sort of an attitudinal thing. Perhaps people are still sort of subconsciously thinking, well, we're a bit concerned about what's going to happen in Europe still. We're a bit concerned about what's going to happen with the US election, which way that's going to go, because that's pretty line ball. And I think the tendency then is perhaps people just keep the bickies in the jar and they don't spend. I think people are probably, because they're in relatively good employment situation here, I think the money's there, but it's all a sort of conscious thing. People have got to become more confident, more optimistic about the future. So I think that's one of the key sort of drivers of it, Paul.
So when then do you think the RBA will act on rates? A lot of analysts are tipping Melbourne Cup Day rate drop.
Yes, I think it's quite likely. I'm still believing there will be another probably 25 basis points drop probably in November or December. I mean, the benefit of that will be that it will help boost retail spending. I mean, we're well aware of some pretty high profile retail owners who have been saying for a long time that the calibration of the cash rate was sort of still out of kilter, and they're thinking it probably should be around 3% instead of 3.5 to help stimulate the economy. So yes, I think towards the end of the year, November, December, it's likely. But again, it'll be very much dependent on what figures are thrown up with the GDP June quarter and also the employment data that comes out on Thursday this week.
And what are you looking at today?
I think the futures markets are showing, because of course Wall Street was closed last night due to Labor Day, the futures market is showing probably a 10-point increase in the market today. Not much. I think waiting for a further lead tonight on the Dow.
Rod North, thanks very much.
Thank you.
So what happens if people don't spend on a sale, like a mid-year traditional sale? Then you get like a double dip sale? Do the prices keep going down, or what's the tactics there?
Well, it seems as though that would be the case, certainly with women's fashion. Some of the prices are just extraordinary, some of the discounts that you can get things at.
So that might be a good tactic by everyone.
By everyone. I think the retailers would just be happy if we walked into the stores and just spent the money.
Now coming up, they're Australian country music's golden couple,
A song.
but they're also